Hi everyone, a very good evening and welcome to yet another Edelweiss Konnect Classroom session. We all hope that you are all in good physical, mental, and financial health. At the same time, I would also like to take this opportunity to begin by first thanking you once again for your continuous patronage and making this Konnect Classroom sessions a big success. In the recent last few months, there has been a lot of buzz around sectoral and thematic investments, right? And I'm sure you must have heard a lot of new ideas coming under this umbrella. And hence, we thought that this may be a good time to clear the clouds around this currently buzzing topic and help you make better informed decisions with regards to investing in any thematic or sectoral schemes. And hence, our topic today, as visible on your screens, is called Know All About Thematic Investing. As usual, we look forward to your queries and questions, and please post it in the chat. And I will respond to all your queries and questions with regards to this discussion that we are having towards the end of our session. Okay, so on that note, let's begin. And let's begin with understanding and talking about, the various ways in which we make investments. So A obviously is, you make investments basis asset classes, and the four broad asset classes which are generally available for investments are equity, debt, real estate, and commodities. In equity, you could either take exposure in a security or a number of securities directly, or through, adding mutual fund schemes into your investment, into your investments. So that's how you can look at equity. In debt, you have traditional debt like your FDs and your corporate debt, which is available. And apart from that, there are also a lot of mutual fund fixed income schemes which are available for you to invest into. Real estate, you could either look at a residential or a commercial real estate property, for your investment requirements, depending on what your idea behind both of these are. And then there are commodities, gold and silver being the more common ones. You could invest directly by buying physical assets. You could buy paper assets, and paper assets in gold. There are government-backed schemes, then there are ETFs, there are fund of funds, various ways in which you could choose an asset class and choose the type of investment in these asset classes which you are comfortable with, right? So that's one way. And then another way is choosing to invest basis a style that resonates with you. Predominantly four styles over here also: growth, value, quality, and momentum. So growth predominantly is investing in growing companies. The idea or defining, or how do you define a growth company, is either it is growing at the same pace as the broader indices are, or maybe even at a faster pace. So that's how growth companies are. So you're riding on the growth wave of the company. Then there is value. How do you define value? Is you are analyzing a security or a number of securities where you think there is an inherent value, but the time of this value has not yet come. So it's predominantly a little cheaper in comparison to its peer set. But you enter and you wait patiently over a period of time, where then the market also realizes the value, the inherent value that you are seeing, and basis that it starts moving up. So so that's how you look at value stocks. Then there is quality. Quality predominantly is you defining a quality parameter, and this is the type of quality portfolio that I want. And basis those quality parameters, you filter out on securities and create a portfolio around it. And then there is momentum in terms of style. Momentum is basically a style wherein you're riding, the price wave that that the security is running through. And basis that currently a lot of talk around momentum, a lot of people are talking momentum primarily because these stocks are riding the momentum wave. So you don't look at fundamentals predominantly or in momentum stocks. You look at this stock, getting that extra bit of push. And because of that, it's riding at a little faster pace. And so you decide to ride the wave as it is, right? So there are four different styles. All these four styles are also available through various mutual fund schemes for you to take exposure into whatever style you resonate with or you become comfortable with. So that's your second way of investing. And the third way is basically looking at some thematics in the broader sense, right? And the way you look at these themes is primarily, if I'm looking at a specific theme, that theme is something which I need to believe is that theme whose time has come. And this is going to be one of the best performing themes or sectors in the investment period that I am looking at taking an exposure in. Again, four different types of broader themes to name. One is structural trends. So if I were to give you an example of how structural trade trends or structural shifts are happening in India, then GST implementation was a large structural shift. The insolvency and bankruptcy code was another one. Privatization of government-owned companies is another big structural trend that we are witnessing. So these are structural trends. So if you believe that these are great structural trends, you would then look at investing into those schemes which are predominantly creating portfolios basis these. Then there is there is something known as mega trends. Mega trends. So digitization is a mega trend. How digital financialization is taking place in the country is another mega trend. Housing, urbanization, manufacturing, healthcare. These are all mega trends, right? Because there is a lot happening, in terms of how the economy and how investments are happening and how people are looking at these, and hence these become mega trends in terms of the thematics. Then there are disruptive trends, or disruptive themes, so 5G mobile, blockchain technology, 3D printing, artificial intelligence, the IoT, Internet of Things, cybersecurity, voice activated searches. These are all disruptive trends which will change the way, or which is changing the way that we are, either communicating or, looking at things or, finding information. These are all disruptions, and these disruptions are something which are happening in some examples which I've given you. So, and there may be some others too. So these are disruptions. It changes the way we look at things, and adaptation of this is so rapid that it becomes something which is very, very fast. And then there are sustainable themes, right? So sustainable manufacturing, renewable energy, regenerative agriculture, which is organic farming, and around this electrical vehicles, circular economy, which is prioritizing conservation and reusing of resources, green buildings. India actually is one of the fastest growing in terms of energy efficient and sustainable construction practices. So these are companies which are looking at reducing, let's say, their carbon footprint. They are looking at, how, our environments can become a little more better for the future. So they are looking at not only growing their businesses, but they are also looking at how we can create a better sustainable future. So these are broader themes, and when I'm talking of investments, these are three predominant buckets. And in this, then there are sub layers through which you could decide to choose, where you get comfortable with regards to your investments. Could be a mix and match also, that's how it predominantly works. Moving on to the next one, where let's talk about what is thematic investing. So if I were to just put it very simply, it is an investing method where you identify significant investment opportunities in popular trends without doing extensive research on individual stocks, right? So you're banking on the trend. You're not banking on a single security. So for example, if you believe electric vehicles will have a strong growth in coming years, you will invest in a theme which is designed explicitly with that same view, right? If you believe, banking, let's say technology, or let's say manufacturing. So you look at, those specific themes, to invest it. So what thematic investing allows us is, it allows us to invest in different and specialized sectors, which then offers us, a concentrated exposure in that sector, which is in line with my belief, right? The good part over here is, although it is concentrated, it is still a little diverse, because it is giving you more than just one security. Right. And if I want to further reduce my risks in terms of thematics, what people are then also doing is they are investing in multiple themes. So they are not only looking at just one theme and saying that this is the theme which is going to which is what I bank on. So they may think that technology, manufacturing, momentum. I want to look at various different types of themes and create a portfolio around it. So that's what thematic investing is. You basically invest basis what you believe is a theme which is going to really work during the investment period that you are looking at. And basis that, instead of then further researching in terms of what is that security which will do very well under that theme, you invest in a scheme, because then instead of just one or two securities, you get a better diversified thematic exposure. So that's where thematic investing helps. What are the benefits? It is a high-powered portfolio, right? It is leveraging that specific theme. So all your entire resources, in terms of the thematic fund, is getting spent on creating that portfolio which leverages that theme. So that's where the idea, obviously, through this is that you generate an additional bit of alpha or returns, in your portfolio, because you are, exposing that investment to a higher degree of risk. And you obviously, because you are ready to take that higher degree of risk, are also wanting to get compensated accordingly. Right. So it is, the idea is that, it is, you are getting, invested into an additional degree of risk. So you get compensated by an additional alpha generation. That's, the idea that everyone is looking at around it. It is basically looking at, a top-down macro call basis that theme, so in that theme, the entire universe gets identified, and then basis that a portfolio gets created. So it's a very, very top-down macro look, in that portfolio, which gives you a well-balanced portfolio under the theme. And it is capturing the structural change in the economy. And hence, if your theme resonates in that aspect, it generates, that kind of interest, it generates that kind of investments, and overall, it works better for the economy and the investors into the theme. So these are the benefits that you can derive if you take thematic exposures. What is happening in India? When we talk of in India, I briefly spoke about some parts around it, but if you look at structurals, like I said, infrastructure, financial, healthcare, defense, MNCs, they are all structural themes. In terms of mega trends, you have manufacturing, technology, innovation, consumption, ESGs. And then you also have specialized. So you have business cycle, schemes, you have quant-based schemes, you have special situation schemes, you have IPO schemes, various different schemes. And the idea through all of this is to create different thematic experiences for the investor and provide sufficient options for the investor to invest basis what they feel are the themes which are going to be the best performing or the high performing ones during the investment period that they are ready to take the exposure to. So there are a lot of options which are available, and so that's where the landscape around India is. Now, how is thematic strategy managed? The idea of any thematic strategy is, there is an active decision making, and so they are predominantly active schemes to a large extent, and the idea for these predominantly is because there is, a degree of alpha generation which is expected from the investors in this. If I were to talk about what are the two broad strategies, one is clearly, looking at actively managed solutions, where, a portfolio manager creates a portfolio, designs a portfolio basis, the theme, and invests in those securities which have an exposure to the theme. So that's one very, very simple way. And the second way is, it's a rule-based way, where you could look at, let's say an outcome-oriented, where you are investing in only those companies which are performing better than inflation. It could be sustainable, investing could be another way. Momentum could be another rule, which you create a portfolio with. And the idea, and during momentum also, you could then have further layers that if there is a 5%, 10% run up, and you think that this run up is just the beginning of a rally for this one, then basis that, or basis then further technical analysis, you create a portfolio, but there is a rule that you follow, that there has to be a certain momentum that gets picked up before you enter. So whether it is actively managed solutions or it is rule based, it is important to remember that both these require active decision making on the part of the portfolio manager, right? Because eventually, whichever strategy gets deployed in creating a thematic portfolio, the idea should be that there is an alpha which gets generated, right? So that's how strategies work. Now let me try and answer the question which plays on every investor's mind when it comes to thematic investing. Are all thematic schemes or investments concentrated in their portfolio? And the very, very frank answer to this is it's not necessary, right? You could have a theme, you could have a broader theme. So technology, manufacturing, momentum, business cycles, they are broader themes, right? So it will not be concentrated only in one sector, or it could be a very, very concentrated sectoral theme. Healthcare, IT, banking, these are concentrated to the sector. And hence, in that sense, if you're wanting to have a better better diversified, but still want to take, still would not mind some kind of concentration, then a broader theme actually works. If you're comfortable with having a concentrated portfolio, then a sectoral strategy, really works, because that only exposes the investment to a specific sector. So in that sense, are all thematic schemes concentrated? Concentrated to, so not necessary, primarily because it could have a broader sectoral allocation and not get defined by only one sector. So in that sense, although it is thematic, and in comparison to a larger diversified portfolio, will it still be a little concentrated? The answer is yes, but there is scope to create diversified portfolios across different sectors, even in a thematic, because a thematic is not a sectoral. A sectoral scheme is concentrated only in a sector. A thematic can go beyond one sector, and hence the concentration over there is not that narrow. Let's look at what's happening in India. If you talk of in India, the current AUM as of end of January, in only thematic schemes is about 2,75,000 crores. If I were to just put a broad number, it's close to about 5% odd. And this is in terms of you having a choice. It's gone very broad. So there are 20 plus themes and about 150 schemes. So in that sense, now the options available are actually very, very wide. And hence, I think, we can see why in the recent times, there are a lot of people talking about it. It's kind of become a buzzword in the industry in terms of thematic, because there are 150 plus schemes, and there are 20 plus themes, plus there is investor interest, obviously, because you can see that the AUM around these schemes is considerably sizable right now. It's not minuscule in that sense. So there is interest, and there are people investing into these schemes. But what we also need to remember is every investment comes with its risks. Thematic schemes have their own risks, and three predominant risks which we need to be very, very cognizant about when we are investing in thematic schemes are timing risk, concentration risk, and higher volatility. So, right, A is market timing risk. When you invest into these schemes, you need to really believe that the time of this theme has arrived and it is going to perform, right? Because that's when you enter this and the rally happens after that. It works. So either so there has to be a lot of research. You have to read a lot. Whoever you're investing through, there has to be very, very strong logic about why this theme seems to be a very, very strong theme in the coming few years. So timing, in that sense, timing risk is something which you need to be cognizant about first, and you need to be sure that you're entering at the right time. It's thematic, so the volatility is higher, and the concentration is also higher. Like I said, in comparison to a well diversified, scheme, let's say a market cap scheme like a large cap, mid cap, small cap, or a multi cap. This is still concentrated and focused towards building a portfolio and creating an alpha basis a specific theme, right? So in that sense, the universe of selection will obviously shrink. So there is a degree of concentration risk which we should be focused upon. There is going to be a higher volatility risk also, because when you're investing in any theme, and let's say there is anything around the theme which has negative news, the volatility will impact everyone. So in that sense, there is a higher volatility with regards to that. So there are these three risks which we should be very, very careful about, and we should be little more detail oriented before investing into a thematic scheme in comparison to a diversified scheme? You know, who should invest? Quite clearly, if you are somebody who can time your entry and exit, you are somebody who's reading, who's, having good knowledge around the theme and around how things are working. So you are somebody who's clued in into what's happening in current affairs and the current news. You are obviously having a higher risk appetite, and you are targeting a higher degree of alpha in your portfolio. See, if I'm taking a higher degree of risk, like I said before, also the idea for any higher degree of risk for any investor would be that it needs to get converted into uh, certain alpha, right? So if you're targeting that alpha, which is a little higher than, let's say, the broader indices and the benchmarks, then yes, you should. If you're okay with those numbers, then there may not be any reason for you to take a higher degree of risk, even if it's fine for you, but you don't need the return. So why expose yourself to any higher degree of risk? So if you're looking at investing, understand the risks, understand whether you are somebody who understands the thematic space. You are reading about it. There is something which you are currently, you are regularly getting clued in, and hence you're taking an exposure around. So predominantly, this is what I had for all of us. As usual, I hope that this presentation has helped you in enhancing your own understanding on thematic investing and helps you take a better informed decision in terms of investing into any thematic scheme. So as usual, if you have any queries or questions, I'll be more than happy to respond to those now. So please post your questions and queries in the chat. So there's a question: how do you identify theme? Like I said, if I'm looking at taking any exposure in thematic investing, I need to understand on why do I myself think that this is a theme which is going to garner an additional bit of alpha during my investment period. Similarly, I need to understand what are the risks, what are the logic behind the theme, how is the portfolio created, how concentrated, or what are diversified options in the theme that I'm getting. So basis that, and when all of this resonates with my investment philosophy and investment requirements, that's how I would think you should identify themes. So popular thematic investment trends, or themes. So manufacturing, technology is something. Momentum is something in the recent times. Where we are seeing, a lot of popularity, but so to say. But like I said, just don't go by what's popular. If this resonates with what you wish to have in your portfolio, if the risk element resonates with your investment requirements, only then invest in these. Don't invest just because it's a popular theme. Anyone else having any other queries, questions, please feel free to ask, and I'll be more than happy to respond. As usual, we look forward to your queries and questions. So there's a question, can I use index for a theme? There are some specific indices which get created to create some themes. For example, more for momentum, there is a specific index which gets created, but the idea is it's a specific index, and that's how this creation works. There's a question, and very, very interesting question. Usually thematic themes are considered to be a bit riskier than normal ones. How does one decide on which one to invest? Like I said, they are riskier, and hence, you need to have an understanding, on what is the theme going to achieve. Check whether this understanding also resonates with your understanding and your logic and your concurrence. Check whether this works in terms of your risk appetite and your requirements, and only basis that make an investment. Can thematic investing be incorporated into long-term investment strategies? Yeah, so I mean, thematics usually have a longer run in comparison to just concentrated sectors, which can be flavor of the season and then not have that flavor. So in that sense, thematics usually have a longer run because, it's not a concentrated risk in terms of just one sector. And hence you could have a longer investment. Anyone else? Any other queries and questions? So the question, how do you stay updated on emerging themes and trends and that may impact your investment strategy? Clearly, it's something for which you will have to continually do your research. You will have to keep on reading on the current things that are happening in the economy and country. You'll have to know, what are the government, predominantly focusing on, where is, what's the government strategy around, themes, and what is the theme that they are looking at, and, only basis that, so you have to keep regular updates. Okay, great. As usual, thank you very much for your time. And it's always a pleasure connecting with you. And we will connect again in the coming month with another topic. Till then, goodbye and take good care of yourselves. Thank you very much. See you. Bye-bye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.